Welcome to The Good, the Bad and the Ugly, especially curated from the world of economy and business today. Let's start with the good. Banking regulator RBI has said that it does not plan any relaxation in the new norms to account for bad loans. RBI has said that the idea was to improve the credit culture in the country as well as to ensure that lenders not just accept but also resolve early signs of stress in the loans given out to the companies. For loan accounts of at least rupees 2000 crore, banks will be required to implement a 180-day resolution period. Failing that, they will have to refer that account for insolvency to the NCLT. The new norms also require all the banks to report to RBI on a weekly basis, even if there is a one-day delay in repayment by any of the accounts. And even though this may lead to almost 3 lakh crore of additional new loans being recognized as NPAs, this may just be short-term pain for long-term gain. That's what makes this good. And now to the bad. Nations that are part of China's infrastructure building initiatives are now realizing the impact of China's indebtedness. Sri Lanka, for instance, built the Hambantota port at the southern tip of the island nation after borrowing heavily from China. The port barely handles one ship a day. Lack of business meant that Sri Lanka was unable to repay the loan taken from China. As a result, Lanka was forced to hand over the port on a 99-year lease to China. As well as similar such initiatives in Africa is fueling speculation that China may be getting hold of strategic assets on the back of failed loans. This is what makes this really bad. And now to the ugly. There are clear signs that the world's biggest oil exporter, Saudi Arabia, may want global oil prices to be in the region of $80 a barrel or even up to $100 a barrel. Saudi officials have indicated these price ranges in closed-door meetings, especially since Saudi Arabia seems to be in no mood to ease the production cut deal agreed upon between oil-producing nations, despite the fact that its objective is about to be achieved. Oil producers began cutting supplies in January of 2017 with the objective of bringing the industrialized nation's oil reserves to their 5-year average. These production cuts have helped the price of oil climb to $73 a barrel, the highest since November of 14. If the Saudis do succeed in keeping prices at $80 or above, it's going to be disaster as far as India's economy is concerned. India imports over 80% of its oil requirement, and high prices are going to have a significant impact on domestic inflation as well as economic growth. If you enjoyed watching this content, please subscribe to the Business Today YouTube channel and also like us on Facebook. Our Facebook page, www.facebook.com/businesstoday. Follow Business Today on Twitter India at BT_India and subscribe to our YouTube channel Business Today India.